Welcome to Brad Academy. Today we have a question on control account. Control account. When it comes to control accounts, we have the total debtors control account, which is also known as the sales ledger control account, which is the summary of all debtors. And we have the total creditors control account, also known as the purchases ledger control account. That is also the summary of all creditors of the company or business. So today we have a question on control accounts. Before I continue, I want to give a small explanation of the sales ledger control account. So with the sales ledger control account, it is the summary of all debtors. So anything that is related to the debtor or customer will go into the sales ledger control account. And if an item will go into the sales ledger control account, for you to know whether it will go to the debit side or the credit side, you first of all ask yourself whether this item is going to increase the debtor's balance or it is going to increase the debtor's balance, whether it's going to decrease the debtor's balance or it is going to increase the debtor's balance. So, for example, when cash from debtors, when you have something like cash from debtors, cash from when debtors make payment of cash, it is definitely going to reduce their balance. It is definitely going to reduce their balance. So if a debtor is owing 1,000 cedis and makes a payment of 500 cedis, now the debtor's balance is going to reduce from 1,000 cedis to 500 cedis. So since it is going to decrease the debtor's balance, we credit it. So any item that is related to the customer or debtor, which is going to decrease the balance, we credit it. And any item that will increase the debtor's balance, we debit it. So when there is a credit sales is when you make sales to the customer on credit. Here, the customer receives goods without making payment. Therefore, his or her balance is going to increase. So when there is credit sales, we um, debit it. That is for the debtors control accounts or the sales ledger control accounts. That is the vice. Now, when you move to the purchases ledger, that is the vice versa of the sales ledger control account. Here, when the item is increasing the creditor's balance, we credit it. So when there is a credit purchases, we credit it. When cash is paid to a creditor, it is going to decrease the debt, the creditor's balance. So we as a company, and we are owing our creditor 1,000 cedis, and we make payments, we the company make payments to our creditor, let's say 700 cedis. Now we are going to, now the balance left for us to pay our creditor is 300 cedis. Therefore, our creditor's balance has reduced to 300 cedis. So when cash is paid to creditor, the creditor's balance will decrease. Therefore, we have to what? Debit it. So anything that decreases the creditor's balance, we debit it. And anything that increases the creditor's balance, we credit it. That is the main concept of the control accounts. Okay, so now let's move to the question we have today. Reading the question. The following balances have been extracted from the books of RAD Limited on 31st March 2023. Debit balance, purchase ledger on 1st April 2022 is 50 cedis. Credit balance, purchases ledger, 1st April 2022 is 8,700. Cash received from customers is 101,600. Cash paid to suppliers is 16,000. Purchases journal is 20,000. Return inwards is 1,700. Return outwards is 1,000. Sales journal is 112,415. Discounts allowed is 2,500. Discounts received is 500. Cash paid to supplier in error, now refunded, is 50 cedi. And check received from customers dishonored is 300 cedis. Cash refunded to customers is 150. Bad debt returned off is 200 cedis. Credit balance transferred from purchases ledger to sales ledger is 500 cedis. Interest charged on customers' account is 50 cedis. Debit balance, sales ledger, debit balance in the sales ledger that is on 31st March 2023 is 6,540. Credit balance in the sales ledger as at 31st March 2023 is 125. Debit balance in the purchase ledger as at 31st March 2023 is 60. And the credit balance in the purchases ledger 31st March 2023 is 10,760. You are required to prepare the sales ledger control account and the purchases ledger control account. Okay, so with the debit balances in the ledgers at the closing, when I get there, I'll explain something to you. But for now, let's start. So when you have a question like this, you can decide to do it simultaneously. That is, you open the sales ledger control account and the purchases ledger control account simultaneously. So that is what we are going to do. So first of all, we write the name of the business, that is RAD Limited. So before I continue, if you've not subscribed to this channel, kindly subscribe to this channel for more videos, and also share for your friends to also have a benefit of this channel. So we are going to have our sales ledger control account here. Very, very simple. Then we can have our purchases ledger control. Nice. So if you have a question on control account, you can do it like this. So we have our CD sign here. Then we can have our CD sign here. Neatly. So let's start with the first one. The first one said the debit balance in the purchases ledger at the beginning. So you see this one, the question is telling you that it is a debit balance. So it has a debit opening balance. It means you have to put this amount on the debit side. So in case the question is silent on uh, the balance and just gives you an opening balance, purchases ledger control account is a creditor's balance. It's a creditor's account. Sorry, it is a creditor's account, and all creditors' account has a credit balance. So if the question is silent on where to place it, then you use the account to determine where you place it. So if, in case it is silent, then you put it on the credit side because it is a creditor's account. But here it is saying that there is a debit balance opening the purchase ledger, which is 50. So we have our opening balance, which is balance go down, which is 50. And the next set the credit balance in the purchases ledger at the beginning, which is 8,700. So we do what the question is asking us to do. Balance brought down, which is 8700. Now the next is cash received from customers. Cash received from customers. So as soon as you hear the customers, then it means it is the sales ledger control account. So when we receive cash from customers, it is going to decrease the customer's balance. And if it is going to decrease the customer's balance, then we do what? We credit it. So since cash is going to reduce the customer's balance, we credit it. That is, we have cash from customers, which is 600. And the next is cash paid to suppliers. Suppliers is the credit. So as soon as you hear the suppliers, then it means it is going to the creditors account. And when cash is paid to suppliers, when we make payment to our suppliers, it reduces the suppliers balance. So if it is reducing the suppliers balances, then we do what? We debit it. So anything that decreases the suppliers or creditors balance, we debit it. So we come to the creditors account and debit cash, which is 16 count. And next is purchases journal. So here we have purchases journal, and we all know that um, we use the purchases journal to record credit purchases. So that is what it's saying. The purchases journal is credit purchases. And when there is credit purchases, our creditors balance will increase. When we make purchase, we the business make purchase on credit, then we are going to owe our creditors. We make purchases without paying, means we are going to owe our creditors. Then it means our creditors balance is going to what? Increase. And if our creditors balance is increasing, then we do what? We credit it. So we come here and we say credit purchases. Credit purchases is 20,000. Then we move to return invoice. Return invoice is related to customers because it is customers that returns goods to we, the company. So if customers return goods to the company, it reduces the their balance. It reduces their balance because if the customer made purchase of lose 1,000 cedis on credit, and at the end of the day, the creditor is sorry, the customer is returning goods worth 300 cedis. Then it means that 300 cedis that the customer is returning, the customer is not going to make payment for that 300 cedis. Therefore, the customer's balance is going to reduce from 1,000 cedis to what? 700 cedis. So when there is a return inwards, it reduces the customer's balance. And if it is reducing the customer's balance, we credit it. So we come to the customer's balance, customer's account, and credit return inwards. So return inwards is 1,700. Then return outwards. Return outwards is going to decrease the creditors balance. So if it is going to decrease the creditors balance, then we have to debit it. So when you look at this, what you do in the sales ledger control account, it is when you come to the creditors account, it is the opposite of this, the debtors account. That is when you credit something here in the debtors account, when you come to the creditors account, you have to debit it. That is how it is mostly. So return outwards. Return outwards is 1,000. Then the next one is sales journal. So sales journal is the credit sales. When there is a credit sales, then it's going to increase the debtors balance. So if it is increasing the debtors balance, we credit it. We credit it. So let's credit sales journal, which is the credit sales. Because we use the sales journal to record credit sales. So that amount is 112. Okay. So then the next one is the discount allowed. The discount allowed. Discounts are allowed is related to our customers. We always give discounts to our customers. We allow discounts to our customers. And when we allow discounts to our customers, it reduces their balance. That is, if they are supposed to pay 1,000 cedis and we allow a discount of 300 cedis, now they are going to pay what 700 cedis. So discount allowed is going to decrease the debtors account or the debtors balance. So we credit it to discounts allowed, which is 2,500. So when there is a discount received, then you should know that it is we are going to receive discount from our creditors. So it is going to decrease the creditors balance. So we debit it. So discount received. As I said, what you do here, it is the opposite here. So if you credited discount allowed here, then it means when you come to this side, you have to what? Debit it. So the discount received is also 500 cedis. Then the next one is cash paid to suppliers in error. Now refunded. Cash paid to suppliers in error. Now refunded. So cash paid to suppliers now refunded. Here is like cash, this cash that has been paid, this cash that has been paid, we are now what? We are refunding some amount of money of it. So it's like it is an error and we are correcting it. So it means this cash that has been refunded to suppliers, we have to what? We have to credit it. So cash refunded to suppliers will be credited here. Cash refunded is 50. Cash refunded is 50 cedis. Then we move to check received from customers discerned. That is discerned check. Discerned check. So this one is customers. So customers, as soon as you hear customers, then it means you have to go to the sales ledger control account. And when the check is discerned, it increases the debtors balance. If you give me a check which is going to decrease your balance. And at the end of the day, the check is discerned. Then it means your balances goes back to where it is. If you give me a check of 1,000 cedis and it reduces, and I take the check to the bank and the bank discerns the check, then it means you are still owing me that 1,000 cedis. It means the balance still increases or it goes back to the previous balance. So when there is a discerned check, it increases the debtors account. So discerned check, discerned check is 300 cedis. Then we have cash refunded to customers. Cash refunded to customers. Cash refunded to customers. So here when cash is refunded to customers, someone is going to say when cash is refunded to customers, it's going to decrease the customer's account. So we should credit it. Since they are going to refund uh, some cash to our customers, then it's going to decrease the debtors or the sales ledger control account balance. So we should credit it. If you look at it in that way, you are going to get it wrong. But then you should rather look at it where this cash from customers, which is on the credit side, which is on the credit side, we are refunding. We feel maybe the money the customer paid, he over made some payment or something. So we are refunding the money to the customer. We are refunding the money to the customer. So we it's like it is an error that has occurred and we are reversing it. You can also look at it in that way. It is an error that has occurred. So because when you receive cash from customers, you credit it, and now you've come to realize, oh, the person was supposed to pay 1,000 cedis, and mistakenly the person paid you 1,500. Now you are reversing the 500 cedis. What you have to do is you have to debit the 500 cedis to cancel 500 cedis on the debit side. So when there is cash refund, we debit it. We don't look at it in a way that a cash refund is going to decrease the debtors balance. So we are going to credit it. So when there is cash refund to customers, we what? We debit it. Also, you can look at it in this way. When you are refunding cash to debtors or customers, the customer or the debtor is going to receive that cash because you, the company, are you are refunding money to the customer. So if you are refunding, it means the customer is going to what? Receive cash. And the double entry principle says that they should debit the receiver. So as soon as you are refunding money to the customer or the debtor is going to receive that cash. Then it means you have to go to the debtor's account and debit it. So anytime there is cash refund to customers, we debit it. So we come here and say cash refund. Cash refund is 150. Okay. Then we have bad debt written off. So when there is a bad debt, it increases, sorry, it decreases the debtors account. Because if the debtors balance is 1,000 cedis and we feel 300 cedis is a bad debt, then obviously the debtors account is going to reduce towards 700. So when there is a bad debt written off, it decreases the customer's account or the debtor's account. So here you said credit balance transferred from the purchases ledger to the sales ledger. So this is this is a way that sometimes they write. Um, this is a way sometimes they write set off. This is a way sometimes they write set off. So when there is a set off, we credit the sales ledger control account and we debit the purchases ledger control account. That is set off. So when we say the set off is where we cancel balances because maybe Amma is owing Kofi 50 cedis and Kofi is owing Amma 100 cedis. So here, Amma and Kofi can decide to set off the 50 cedis. Now, Kofi will be owing Amma 50 cedis, and now Amma will be owing Kofi 0 cedi. You get it? So that is the set off. You are owing me, I'm also owing you. Okay, let's set off against it. So when there is a set off, we credit the sales ledger control account and we debit the purchases ledger control account. So we are going to treat this as a set off. So that is 500. cedi. Then we move to to the same amount. Then we move to the next one. The next one is interest charge on customers' accounts. When there is interest charge on customers' accounts, it is going to increase the customers' accounts. So that is 15 cedis. Then we move to the balances that I was talking about. So here they said the debit balance sales ledger, which is 6,540. So someone will say debit balance this. So what this one is trying to say is at the end of the year, there was a debit balance in the sales ledger control account. Do you get it? Someone is going to put, so normally when account is, let me do it over here. So when you see this, let's say this one is account. Sorry, this one is account A. For us to say that this account A has a debit balance, then it means the balance brought down is on the debit side. That is what we mean. Let me use this. Then we have our balance carried down here. So when you have this account where the balance brought down after the 2,000 is on the debit side, that is where we see the account is a debit balance. Sorry, the account has a debit balance. So we are saying this account A has a debit balance because of this balance brought down on the debit side, not the balance carried down. That is what it means. So when you have a question and they are saying that a debit balance in the sales ledger control account, then it means that amount that you are seeing over here has a debit balance. So it means that amount has a debit balance. The balance brought down will be on the debit side. That is what it means. It means the balance brought down. That is after the 2,000. The balance brought down, which is 6,040 will be here. Hope it's clear. And if there is a balance brought down, if there is a balance brought down on the debit side, then it means there was a balance carried down on the credit side. So with that same amount, which is 6,500. That is what it means. And let's say we have account B. For us to say this account B is a credit balance, then it means that the balance brought down is on the credit side. Then you have the balance carried down here. So we say that account A has a debit balance because of this balance brought down, which is on the debit side. So it is this balance brought down that we use to determine the account balance. So this account B, we see that this account B has a credit balance because of this balance brought down, which is on the credit side. We don't use the balance carried down to determine the balance of the account. There's the balance brought down after the total. That is what we used to. So anytime they tell you this is a debit balance, this one is a credit balance, then it means that that is the balance brought down should be on the debit side or the credit side after the totals. That is what you've done for the sales ledger control. And again, they are saying that a credit balance in the sales ledger control account. So if they are saying there is a credit balance in the sales ledger control account, then it means the balance brought down should be on the credit side. That is after the total. So balance brought down, which is 125. 125. So that is it. This one will be after the totals. So what this means is, so when there is a balance brought down on the credit side, which is the credit balance 125, that is what the question is saying. If there is a credit balance here on, then it means there is a what? A balance carried down. No one should tell you, but you should know. If there is a credit balance here, then which is the balance brought down, then it means there is a balance carried down over here with that same amount. You are done with this one. So when you add the debit side, when you add the debit side and you add the credit side, including the balance carried down. When we are adding, we don't add the balance brought down. We only add the figures, including the balance carried down. So it means when you add the debit side and the credit side, it should give you that same amount. That is why we say the control account is a self-balancing account. So when you add the debit side and the credit side, it should give you that same amount. So when you add the credit side, when you add the debit side, it will give you 113,040. Yeah. Yes. So when you add the debit side, it will give you 11304. So 11304. When you add the credit side to, it will also give you 11304. That is it. When you're able to do this, you are done. Then you come to the when you come to the purchases ledger control account, it says that a debit balance in the purchases ledger control account. It means that if it is a debit balance, then it means the balance brought down should be on the debit side. So you come here, you write the balance brought down, and the amount is 60. And you should know that if there is a balance brought down on the debit side, then it means there is a balance carried down. You should know this. No one will tell you, but you should know that if there is a balance brought down on the debit side, then there will be a balance carried down on the credit side. Then the next one is a credit balance. So as soon as you hear the credit balance, then it means the balance brought down should be on the credit side. So the balance brought down is 10,760. So when you are done with this, sum up the debit side and the credit side. So when you sum up the debit side and the credit side, so it means when there is a balance brought down on the credit side, it means there will be a balance carried down the debit side, which is 10760. So what is after doing this, when you sum up the debit side, it should be the same as the credit side. So when you do that, you are going to get 28, 28, 8, 10. Then that will be the same over. Okay. So that is all for this particular question on control account. That is all. So subscribe for more tutorials on control accounts. I'll be uploading more questions on to better you understand it. So subscribe and click on your notification bell. So anytime a new video is uploaded, you'll be the first to be notified. Put in your comments and also like and share for your friends to also have a benefit of this channel. See you in my next video. Bye bye.